This report brought to you by the Richmond Club, where investors and high-growth companies meet.
Our next speaker is the Vice President of Exploration for Constantine Metals. Please welcome Mr. Darwin Green.
So Constantine, we're a base and precious metals explorer with a North American focus. We made a discovery in Alaska, a very significant base metal project that is our flagship, and it's on the path to development. But we're really two stories in one, or two for the price of one, if you will. We've got a pretty compelling, I think, value creation opportunity in that we've got a very nice portfolio of gold assets that will be spinning out into a separate company. So if you buy Constantine today, you'll be able to get shares in the new co here in the coming months, and we'll have news out on that very soon. So this talk, it's structured on the front end. I'm going to talk about our base metal asset that's just reaching critical mass. We're coming out with a PEA. We've got a fantastic partner, and then the back half is going to be talking about the gold opportunity. Off the top, who we are, you know, we've got I guess a deep bench technically. We're a strong technical team with a group that's had a lot of success in the mining business, exploration business in particular, finding and discovering ore deposits. We've got a tight share structure with just 45 million shares outstanding. We do have cash in the bank. It's probably closer to 3 million right now since our last financial statement on there. And we've got endorsement in our key project through a joint venture. And we have endorsement, I think, in the company through a roster of very high-quality shareholders, Electrum Funds based out of New York, Thomas Kaplan's group, John Tognetti, he's a principal at Haywood Securities, and management's got a lot of skin in the game. Still have 12% of the company IPO'd in 2006, so we've been very diligent at protecting our shareholder value and keeping skin in the game. So talking about Palmer, we are in Alaska. Not all Alaska is the same. It's a very, very big state. We're in a very accessible part of Alaska, and that's key when you're dealing with a base metal asset that has to get concentrate to market. We literally look over a paved highway. It's a brand new bridge that connects our project by road to that highway, and 40 miles to a deep sea port. We have a core area or a main deposit that we think has reached critical mass. We've also had success recently in finding other deposits on the property, and we think there's more to be found. In terms of jurisdiction, we're an area that knows mining. There's 2 active mines. 2 of the 6 operating mines in Alaska are right within our neighborhood, the Kensington Mine and Greens Creek Mine. In terms of types of deposits, we're what's called a volcanogenic massive sulfide, or VMS. And if you're going to pick a place in the world for these types of deposits, you've got one of the richest and one of the largest in the world. So it's a good place to be looking. It's got good pedigree. In terms of partnership, you know, we're a junior explorer. We IPO'd with the idea of finding something here. We found something, we advanced it, and then we brought in a partner. We're very selective. We think we have the ideal partner for this project. Dowa Metals Mining of Japan. They operate Japan's largest zinc smelter. They spent US $22 million to earn a 49% interest. They earned in at the beginning of 2017, so now it's a joint venture going forwards with Constantine as majority owner, 51%, and Dowa with 49%. But what it means to have a partner like this, particularly in the capital markets we've had in the mining space for the last number of years, is we've got somebody with deep pockets who's a partner who's also very motivated to get this to the end game. They want our finished product. They want the concentrate. Zinc concentrate is something that's been in short supply in the world. There's just been a lack of exploration and a lack of new discoveries. You know, we think it's a huge endorsement for us and the project. As far as success, the last 12 months have been really, really active for us. We've been very successful in growing the size of the deposit. We entered the year 2018 with an 8 million ton resource. We exited the year with a total resource base of 14 million tons. We always had 10 million tons as kind of our critical threshold with which to launch into economics. We blew right by that, so we launched a PEA. It's going to be the first look at the economics and what a mine will look like here. We also did a lot of metallurgy work and some other factors that feed into that PEA. And that's imminent. That's coming out here in the next few weeks. So in terms of an investor right now, there's a real near-term opportunity to we think, show some real value in the company that's hard to capture outside of a PEA. So just a quick look at that resource. It's made up of 2 different deposits. Take you to the bottom 2 lines. About a third of it's in the indicated category, 2/3 in the inferred. But the real takeaway is it's on a zinc equivalent or copper equivalent basis. It's sort of 9 to 10% zinc equivalent, sort of 3.5 to 4% copper equivalent. Those are good grades. They're grades that have been mined historically. So this isn't a project that's sat on the shelf and needs high metal prices to work. This is the kind of stuff that's always worked, as long as the mine costs are low, are reasonable. It's a bit of a unique deposit in that it's zinc and copper, but it comes with an industrial commodity called barite. It's used extensively as a weighting product in the oil industry. About 25% of our deposit is barite. We're going to be mining and milling it anyways, so the incremental cost to actually process that and pull it off is very, very low. It's almost zero. And then the key is, what's your access to market? Well, being on Tidewater is key. Most of North America's barite comes from China or India, some from Mexico. I know they got cheap labor, but it's hard to beat free because we're already mining it and milling it anyways. Anyhow, what the deposit looks like, it's a good, well-behaved deposit. This is the main deposit area. Looking here at the south wall, sort of 10 million tons in the field of view here. We've taken it from surface down about 700 meters. Great continuity, great width, sort of 20-plus meter true width throughout a lot of this. Good geometry, and it's open to expansion. These are all the things you want to see that lend themselves to lower cost mining. But the real kind of a new excitement for us, and something we've always known about the project, is we feel we have a multi-deposit district on our hands. We proved that in 2017 with the discovery of a new deposit. By the end of 2018, we had enough holes to generate our first resource. Big, thick intersections, nice grades. This particular deposit has more precious metals. It's quite high-grade silver and gold to go along with the zinc and the lead. Less copper than our other deposit. So it's sitting around 4 million tons. It's open to expansion, a very early stage discovery, but helps prove up our point about that opportunity to really grow some tons here and kind of develop a multi-decade mining operation, which is what everyone wants. It's what the big players want. Continuing with that theme, this is from an exploration model. We've been at this for a while. We've kind of cracked the code, if you will, on finding more deposits. And we also like to look to Japan, another VMS district. These types of deposits, they typically occur in clusters. The takeaway from this slide is, there's, over a dozen deposits that collectively added up to 140 million tons, plus 100-year mining history, but they all occurred along the exact same geologic time horizon. You move to Alaska and our project, all of our showings are occurring along the same time horizon, but instead of being flat and extended over 20 kilometers, made the mountains there and you squished everything together, so you've actually compressed a huge district into a tight, confined area. We're just at the leading edge of exploring the other parts of this property. We think we have the code to go find more, and so we see there's a pretty compelling case for upside opportunity. This is what it looks like. It is steep, it is mountainous, but that's actually your friend when you're looking at an underground mine. This would be a high-grade, underground, small footprint, low environmental impact type of operation. You would enter from the bottom and work your way up. So it's a huge advantage. When you think of a normal mine, you got to sink a shaft. Single biggest expense, drop it down 500-600 meters. That's a lot of money. Here, you just short lateral development. You're into your mine, and then you mine your way up. You develop an ore pass, essentially a laundry chute for ore. Throw it down, pick it up at the bottom. So it's actually while challenging for exploration, it's a real advantage come mining. So that highway, it's a great highway, all-season highway. This is an ice-free port. The climate here is like Prince Rupert, Northwest BC. Leads to a port facility, deep tidewater. So with huge advantages from a development perspective. What we're working on now, one of the challenges from a project is how do you value it? And one of the big advantages we see are all these sort of low-cost, low-development opportunities, but it's hard to capture that outside of a PEA. So the metallurgy, it's soft. We get high recoveries. Wide zones, all of it's amenable to long hole stoping. It's your lowest cost mining method. Ore pass, these other things I spoke about, all collectively lead to what we believe is going to show a low cost operation, which equals high margin. So this is what we're waiting for. This is coming out within the next very, very near term here. We will have a PEA. We can look at industry comps in the business, and 0.3x of price to NAV here is the typical ratio. We're well under that value in our opinion, but we've got to see the PEA to prove it. But not all PEAs are created equal, not all projects are created equal. A lot of project people don't believe in, and these are some of the reasons. But we don't have any of them. We're not remote, we're not third world. It's a manageable CapEx. These are kind of projects that are 200 or 300 million to build. We have a very motivated partner who's going to pay for half of it, and there's a tremendous amount of exploration upside. So that's the base metal story. Now into the gold story. It's so it's kind of a neat opportunity that we have. We're blessed with assets, and we're right in the process now of spinning out those gold assets into a brand new company. Again, if you're a shareholder today, you will get shares of that new co. And we anticipate having news out on this very soon. And we're branding ourselves really as the high-grade gold play in North America. And we're doing that for a reason. Because we have two exceptionally high-grade assets. In Ontario, closer to home here, we have the Munro Croesus project. Just outstandingly high grade. It was mined into Turner sort of from 1914 to the early 30s. Small scale production, but some of the highest grade gold ever produced out of Ontario. There's a similar analog in Australia, RNC, the Beta Hunt mine, where they've gotten a lot of airplay. It's the exact same type of environment. It's been in private hands for a long time, and we're really excited about getting after this. In addition to that, we acquired the Johnson Tract project in Alaska, and we're just finalizing some of the terms of the final formal lease on that. And it's an opportunity that came our way through our relationships in Alaska, and it has some tremendous past drill results. 70 meters of 20 grams gold, 100 meters of 10 grams gold. You don't see those kind of intersections every day. What's even rarer is to see that with the base metals we see with it. Running 5 to 10% zinc and copper. It's a really unique project. It was advanced by Westman Mining. It was discovered in the 80s, advanced by Westman Mining into the 90s. They were taken over by Boliden that got mothballed, and it's been off the market ever since. I've worked in Alaska for over 20 years. I hadn't heard of this project till it came my way. And it's got all the right elements. It's good width, phenomenal grade, it's great continuity, exposed at surface. You can take it down almost 300 meters. It is offset by a fault, though. The very bottom edge is truncated by a fault. We think we know where that offset goes. We think there's a lot more room to find more of this. And it's just a real fun and exciting project that we're pretty keen to get after. And it's right in our wheelhouse. We've got a lot of jurisdictional expertise in Alaska. We know the climate there. We know how to operate there. We've got great relationships in the communities there. So in multiple prospects. So this is reminds me a lot of our Palmer project in Alaska when we first got there. You could fly around and see showings all over the place. Almost none of them have had any real drill exploration. There is one. It's about 4 or 5 kilometers north of the deposit. It has comparable grades to what we saw at the main deposit. So clearly some opportunity here to develop a multi-million ounce multi-deposit opportunity. Moving to Ontario, quick snapshot here. Three project areas. Golden Mile and Golden Perimeter are just big land packages. Croesus is the very high-grade material. The photos here on the left are ones that we have personally. Our president, he had a family connection to this project, so these were in his basement as a kid. They'd come out at parties. They're averaging, 27% gold. Just unbelievably rich, high-grade specimens. They're specimens of this deposit. They're in the Royal Ontario Museum. On the right-hand side is samples from Beta Hunt mine, and very just identical environment. There's a specific stratigraphic unit, chemical trap. When these veins cross that unit, the gold comes out. We think we've got a real opportunity to find more of this, and we've been waiting for quite a while to give it a crack. So in summary, a dual opportunity with a lot of near-term value creation. PEA coming out, it gives us an opportunity to market, a re-rate opportunity. We'll have something to kind of compare ourselves to, and we think there's tremendous value opportunity there, as well as this gold project. And as is common, you only get value for one asset within one company. We feel just the very nature of spinning it out will daylight that value of those assets. So that's all I got. Thank you very much.
If you enjoyed this video, please let us know. You've been watching the Richmond Club Report. If you've just come across this channel, please feel free to like and subscribe. I'm sure you'll find a lot of interesting and lucrative investment and trading ideas around here. We'll see you again soon on the next video. Cheers, guys. Have an amazing and profitable day.